Hey traders, Chris Pulver here. Nice to be with all of you. This is the weekly outlook for the week of the 27th of January through the 31st. We have a pretty wild and crazy week to kick things off. Just got back from a conference in Orlando. Nice to be back in the home office and ready to rock and roll this week. We have a bit of a scare rumbling through the markets right now. We have the coronavirus in Asia with about 90,000 cases. I know that there's over 40 confirmed deaths. A lot of quarantines going on. The markets are scared. We have a lot of earnings this week. In the stock market, let me go ahead and scroll down through what I've highlighted. So we have big earnings. Monday, we have 3M and Whirlpool. Tuesday, Apple, Alibaba, Microsoft, McDonald's, Starbucks, Tesla, Visa. By the way, most of these stocks from 2019 are at or very near historical highs. Wednesday, we have a Fed rate decision. Most likely the Fed's going to keep things the same. It will be interesting to see. We're starting off on a very sour note as we go into U.S. afternoon trading. We have most of the U.S. markets down over 1% today. So the Fed, with this being the case, will probably jump in and say, if needed, they would consider cutting rates. Now, they may not cut rates this Wednesday. In fact, I'll be running a bonus session at 1:30 p.m. to get ready for that. The news is actually at 2 p.m. Eastern Time on Wednesday, the 29th. But like I said, we saw this last year in August. We saw a lot of central banks step up to the plate and say they're willing to accommodate, willing to cut rates to make sure that the markets don't get too scared. Continuing on with earnings, Amazon earnings on Wednesday, AT&T, Boeing, General Electric. We have PayPal, Electronic Arts, Hershey, Verizon on Thursday. Friday is AKA Brexit Day. We have the UK supposed to be withdrawing from the European Union officially on Friday the 31st. That could shake things up on the pound crosses. We also have a pound rate decision on Thursday. Most likely that will take a backseat to Friday if they're going to officially exit or not. If it's official, Brexit is not officially done. There's a lot of negotiations and trade agreements that will need to happen between the European Union and the UK, but we could see some renewed volatility on the pound crosses this week. For the most part, January was a fairly steady, stable, melt-up, continuation, low volatility month. Looks like we have been kicking the bear, perhaps, and maybe slapping its nose a little bit because it's starting to peek its head out and claw around. So we have the markets starting off on a soft front. Like I said, here is the dashboard from today's trading. U.S. markets, as you see, 1.25%, 1.25%, nearly 1.5%. So we have the Dow, the S&P down. We have the NASDAQ down. The volatility, take a look at this just on the VIX, the volatility index, aka the fear gauge. Look at this spike up. We had $19, just over $19 today. Obviously, there's a big rejection from that high, so we might settle back into the gap. But from last week to today, that's obviously starting things off on a rough note this week. So are we going to come back in to fill this gap, or we're going to come back down and settle back into these lows if the Fed can appease the market and kind of keep things going business as usual? We'll find out. Otherwise, if we have renewed volatility, then we may come in and find this gap, and I would actually like to see a new high. The problem is that this is a fear gauge, and we will start looking at currency pairs on the rebound. If we start to see this go higher, expect Japanese yen strength, expect Swiss franc strength, which is likely to continue. We've already seen a fairly strong Swiss over the last couple of weeks. The dollar remains resilient as well. So your safe haven risk-off currency pairs, the Japanese yen, the Swiss franc, and the dollar, will continue to get stronger if this VIX goes up. So if we retreat quickly tomorrow and by the end of the week end up settling back down in here, then I would suspect that the technicals end up winning. Some of the positions I'm in, I got filled on a couple of Aussie pairs. Aussie CAD is back down towards lows, Aussie Swiss back down towards lows, Aussie dollar, Euro Aussie back up towards highs, Euro Swiss below 107. We're looking at that 106 level. Euro New Zealand is actually doing really well. It's a trade we're in, and up a few hundred pips, or at least 100 pips on that one. New Zealand Swiss also on a pullback. So we'll address those in my trading room. And I wanted to let everyone know that you've got another module coming this week. Here's my YouTube channel. We have the Keep It Seriously Simple Module 1, Module 2. So Module 3 is going to be about support and resistance, and I'm going to tie in some price action. So look for that to drop this week. Hopefully I'll have that done for you all later on today or tomorrow. If you are subscribed to my YouTube channel, get those notifications when this module does hit. You should see that pop up on your phone or notifications. If not, check this in the next 24 hours and look for KISS, Keep It Seriously Simple, Module 3. So looking forward to doing that. Again, great comments and feedback coming in, so please keep that coming through. If you're out there trying to follow me on social media, here's how you can find me. Instagram at pulver.chris, Twitter at pulverchris, Facebook, YouTube, just type in my name, and off we go to this week's chart. So, as I said, with the risk-off trading, that means stronger yen, stronger Swiss, stronger dollar. So take a look at your currency strength chart for the day. Let's go to today's trading. You can see here that you have the Swiss and the dollar and the yen on top. They are the strongest currency pairs of the day. You have the New Zealand and the Aussie on the bottom. So the Aussie getting beat up pretty badly, New Zealand getting beat up pretty badly. The coronavirus scare in China certainly raising some concern. China's actually on holiday this week for Spring Festival, so normal trading in Asia may resume after this week. So here is the calendar. You can see here, bank holiday. China banks will be closed in observance of the Spring Festival, and that goes on through most of the week. In fact, you see here all day on Thursday. Bank holiday again in China. Now, other news to come out this week. Big one, like I said, I've got a rate decision for the Fed on Wednesday. Expected to stay the same at 1.75%. We have the lower threshold at 1.5, upper threshold at 1.75. Most likely the Fed will keep rates on hold. The press conference with Jerome Powell, and depending on what trading is like, depending on what the stock market looks like going into this Wednesday rate decision / press conference, we might see the narrative change a little bit to make sure that the Fed is going to stay accommodative. The UK has a rate decision as well on Thursday for the pound. Again, expected to stay the same at 0.75%. But bigger news, I think, than Thursday's rate decision is going to be Friday's Brexit. Of course, that's not on the calendar. That's just what the markets are looking at for the date of the European Union and the UK officially severing ties and then going on to work with each other on some type of trade agreements to make sure it's mutually beneficial and they can continue to coexist without the threat of contagion escalating. So it is a big week, and given the fact that we haven't seen a lot of volatility in January, I think the markets are, kind of backpedaling or caught off guard at this time. We'll see how they correct and finish up in the next couple of days, or certainly by the end of the week. All right, let's take a look at the charts. Here's the dollar getting a little bit stronger. We had a great session. I was in Orlando for this 2020 kickoff event. Had a lot of fun, covered a lot of information. Technically speaking, I look back at how trading was in 2019, had a lot of success in 2019, nice and steady in 2019. 2020 is a brand new year. So regardless of what you did in 2019, if you win, awesome. If you lost, doesn't matter. We're looking for new trading opportunities. We're looking for profits and to be consistently profitable. Now, this week in my trading room, I will be spending a lot of time setting the expectations of this year. I have a feeling that most of the big moves this year will come in big breakout trends. And what that leaves us to deal with is either sitting in positions, waiting for trends or waiting for breakouts, or range trading. And so I think that, a typical trend as far as seasonality goes, April, May, really strong pre-summer push. I'm looking for anything and everything to trend during those couple of months to get us into summer trading. Once we get out of summer, we will see if there's a post-summer breakout in August, September, but honestly, the election is so close, the U.S. election in November is so close that I wouldn't expect a lot of movement coming out of summer. Now, April, May, I'm going to get pretty aggressive. Whatever trends get us into April and May, I would think that they're probably going to ride or grind or drift through the summer. We might have an aggressive April, May. We might have that trend, those breakouts last through June, last through July. Then we start looking for some bottoms, tops, transitions in August. Once we get out of August, September into post-summer trading, the election being so close in November, I think I'm going to trade more neutral currency pairs. Pairs that won't be heavily affected by the U.S. election in November, pairs that aren't going to be as sensitive to the stock market movement, or just good technicals is really my main focus. So, again, that's this week in my trading room. We'll talk about that. But for this video, weekly outlook, look, the dollar's stable. The dollar's running back up here to test this high. There are two levels we keep watching. It's either forming a flat pattern at this right shoulder on the back side of this channel, or we have one more level right up here. And I'll just make this, let's go blue. So we could come back and revisit this high. We can come back and revisit this high. On the right side of this channel, even if it's going to continue to consolidate, I think this is just the setup for the bigger fall. Right? Now, again, time-wise, we might have to sit on trades where the dollar doesn't necessarily trend. We might wait for this trend. We might have to wait for this trend until the end of March, early April to see this setup. But, despite all the noise, despite all the news, and despite all the scares that might happen from now until then, if we have direction in April, we should follow it. Right now, it's still range trading. It's still low volatility. I'm still buying low. I'm still selling high. And really just trying to stick the overall technicals. And then once we come into April, May, I'll be a little bit more participatory, meaning I'll just trade what I see and go along with what I'm noticing on the sentiment strength line and try to follow some direction like so. All right, so dollar index continues to be resilient, but that's what we expected is in the short term, a little bit more bullishness on the dollar, even to equal highs or slightly higher highs back into previous resistance and the backside of this channel before we get a better setup for a fall. One thing I was noticing also on cryptos have been taken off nicely to the upside. We're revisiting these highs around 9,000. So Bitcoin is currently at 8,913. Getting above that yearly pivot was a fantastic close. Break the trend line, break the channel, break the correction, pull back, and now we hopefully are going to new highs. If it starts to pick up some steam and momentum, 13.7 sounds great, right? So traders that have been in from 3,500, 4,000, traders that got in back over here around 7,000 or 8,000. Looking to the upside, hopefully we can revisit these highs. This is a high of June 2019. Other cryptos are heading that way as well. Here's Litecoin. Remember, we have a yearly pivot. Litecoin is currently trading around 58.98 with a yearly pivot around 72. The base of this wedge, or where this started, this trend line break, is right around 106 with 2019 highs around 146. So again, on the right side of the trend line, gave us an opportunity to get in around $40 to $45. Currently, that's positive. We run up towards 72 and hopefully see some trending signs, high to low, high to low, high to low. We might have a little correction in case the pivots were missed along the way, but I like this yearly pivot for starters and get back up to previous highs and, of course, get back to 2019 highs. And even better is 2017. Come on. Let's give us something big in 2020. Let's go after these 2017 highs. That's Litecoin. Ethereum, similar trajectory on all the cryptocurrencies. Here is a break of the trend line around 138 to 140. Currently trading at 170. Yearly pivot at 195. Ripple, right side of the trend line. It is right there. We had this little poke around 25 cents. It's currently trading at 23. Yearly pivot around 29 cents. On the right side of the trend line, and after all this correction starting in April 2018, let's go. Get on the right side of that trend line. Let's go. I mean, this is $1. If we go from 20 cents to $1, hey, Ripple is fun. Okay, if it's 5 times your money, I'm sure we're going to have some profit taking. Now, again, look at your 2017 highs. We'd love to see this move go straight up. We might have range trading, right? This could be equal highs to these lows, come back up to $1, come back down to these lows. So there may be some profit taking in here around $1. Keep in mind that in 2017, there was no futures market. Now there is. So if you have institutions or, futures market wanting to short this, then that's a level of resistance. So we have to respect the technicals, not just the bubble that was created in 2017. So anyway, cryptos are on the move. Nice little levels higher on yearly pivots. And hopefully this trajectory continues. Let's go back into currency pairs. We'll start from the beginning. Aussie CAD. Aussie CAD still range bound. We have a sharp little move to the downside. I do have that pending buy at 8880. Here's the low for today, 8898. We are very close to those lows. I'm still looking for this low to hold, and get us back into a yearly pivot at 9180, a yearly pivot at 9650. For right now, since I'm looking to buy this low, which is around 8880, then I'm looking for that yearly pivot. That would be target number 1 for me. We still have to get to this outer trend line. For me to hang on to this towards 9650, we need a very big shift. In fact, I did notice that oil has actually been steadily moving lower, but we have a weaker move in oil. Look at this. Oil came all the way back down to $53. The problem is we have CAD is weak and Aussie's weak. So in fact, the Aussie is the weaker of the two. So even though oil did exactly what we wanted to do from resistance all the way down to this support around $53, the Aussie CAD is not showing or benefiting from that CAD weakness because the Aussie is also weaker. So what do we have to do in oil? Well, we're coming right back into major support around $52 to $51. We'll probably have some bottoms there, some range-bound trading back up towards 60. We'll see if oil has any more fundamentals lined with it, but I would suspect that from $52 to $51, I'd expect to see some support there. Aussie Swiss, this one is technically at a fantastic level. It is, of course, getting a little bit more violent to the downside because of the Swiss franc strength and the risk-off trading. I'm going to get rid of these arrows here. So positions are filled. So we have 6,559 filled. Back to equal lows from 2019 in August. We're back there. Look, it's historical lows. You know, I'm willing to hang on to it. Obviously, I don't want to sit here and watch this thing just keep going violently to the downside. All right. The reality is, if we make a pullback and make fresh lows, there's going to be disagreement. Now, on the daily chart, you notice that we're seeing momentum agreeing with the movement to the downside. All right. So this is not signaling a bottom, although if you look left, these August lows are really important. If you go to a higher time frame and zoom in, you know, we are at equal lows in price, and you can see that we have a pretty noticeable disagreement from momentum with the bigger time frame. So lows in price, higher lows in momentum on the weekly chart. Also, stochastic wise, looking for a buy zone to commit. So we have now 1, 2, 3, 4, 5 weeks in a row that have proven bearish. Of course, this week's not over yet, but you know, we'll have to see a V bottom or something to reignite the bulls. Otherwise, the bulls have gone to run for the hills. The bears are waking up and really taking the market by storm. And this is what happens, right? I mean, we saw 2019 drift, 11, 12% towards the end of the year. The S&P delivered over 30% with very little pullbacks. In fact, the last quarter, you know, 10, 11, 12%, just the final quarter of 2019, we didn't really see much of a correction. So it would make sense that we may see a 3, 4, 5% dip or a correction. Again, from a technical standpoint, is the market interested in buying the dip? Possibly. Heading into an election year? Possibly. Right? Because if we evaporate those gains from 2019 to start things off, I mean, again, the Fed will likely speak up. Central banks will likely step up. And if that's the case, we're going to see some V-bottoms. So technical, and that's what I'm getting at here. The technical trade. I'm long on the Aussie Swiss. Right? I'm long, I'm small on my position size, so I'm waiting this out. But from a technical level, there's no better spot I'd rather be than buying at the lows. So I'll stay patient for right now. I don't have any entries lower at this time. Going into 5 weeks in a row, I might have to wait another week or so. This might be, again, this will be interesting rather than getting ahead of myself. Let's see what this week does. Let's see what the next 24 to 40 hours does, right? If we close negative on the U.S. market, what does tomorrow give us? Is tomorrow, you know, the ability for the volatility index to balance, to come back down and fill the gap, to maybe come back in and settle back in and lower volatility? We'll find out. If so, we'll see some bottoms here on the Aussie, and we'll start heading back to range levels of this outer trend line. But technically speaking, I remain long. It's at historical lows. Aussie yen. Big drop to the downside. You know, rising wedge. We saw this trend line break. It is on the backside of the trend line. It is heading lower. Take a look on the smaller time frame. From our high and the right side of the trend line, you know, we're just shy of that 618 recovery. It will be interesting to see where this comes back. You know, we might end up falling into this level of support right around 7,300. We could also revisit the lows. Again, we had a January flash crash in 2019. Revisit those lows in August of 2019. So for right now, look, if it's in free fall, that's support. If it's in free fall, that's support. I'm looking for V bottoms if I'm a buyer. Otherwise, look, you're selling bear flags. You know, if you're looking to scalp and participate, you can go into something like Right Trade. You can go into a scalp-based system. Look, your 30-minute chart is in the sell zone. If this pulls back to the blue ribbon, you can sell it. If this pulls back to any of these areas, you can sell the blue ribbon, sell the red ribbon, and look for it to continue lower. Same thing here. Okay, we go down, we pull back. We go down, we pull back. We go down, we pull back. If this trend continues, we're going to stay bearish on the Aussie yen until it tells us otherwise. If we come into those support levels, then we end up making a price action V bottom, stall, and go back up and correct into this ribbon. From there, we have to see the bulls close above. If the bulls close above, then that's a V bottom and a reversal. But for right now, I would suspect that this might just go sideways and keep pushing lower, and the pressure remains to the downside. All right, so yen pairs, I think the yen is going to continue to stay fairly strong. Same thing with the Swiss as well. Aussie New Zealand, this pair is a little bit more neutral, but we are seeing the New Zealand getting the bet, or at least the Aussie's just extremely weak for right now. Okay, so we're back down to lows. What I am liking about this currency pair, look at the lows. We're around 103.20, 10300. I like this. I love that, in fact. This is price and momentum disagreeing. So we have new lows in price. It's just a slightly lower low in price with a disagreement in momentum. Our stochastic is coming back into a buy zone. Again, this is a daily chart. So if we look left on the Aussie New Zealand, I'm long from 106 down to 103. I'm ready to ride this down to possibly 102, 102.50, 101.50. I'm just going to stay long because of this great pocket inefficiency here of 107. So I'll be patient for now and keeping the trade sizes nice and small, and we'll start taking action and adding to this when it confirms it's going in our direction. But we have some nice divergence right now on the Aussie New Zealand on the daily. So I'm going to stick with this one. And this is one that even though we might have a scary stock market, risk-off trading, the Aussie New Zealand tends to be immune to all of that because they're both equally affected. So one might be slightly weaker than the other, but they're both equally affected. So ultimately, this one's just a good technical trade. Aussie dollar. Violent move to the downside. 7,000 target one was hit last year. We're coming back to retest this long channel. Now, these blue levels represent areas that I'm buying. I have a small trade here, small trade here, small trade here. Also on the right side of the channel, also on the right side of the trend line, preparing for this level here to be support. So we might come back into 67, 66.50 to find some support. From there, I hope that's enough to disagree with momentum. I hope that's enough to start carving out some lows. I hope it dips a little bit down here and then shoots up. And that would be a big trade to want to run all the way back up towards 7,000 and give us a reversal pattern on the right side of the trend line. So staying patient right now. Obviously, it's falling very aggressively today. Look, I mean, the argument here is traders are like, well, why aren't you selling it? Well, because I'm looking at the bigger time frame. So, did I expect it to pull back? Yes. How is it falling right now? Violently. The daily chart, the weekly chart, it's probably not going to be fun to have buy positions here and notice that this is coming down really aggressively, right? But if you look left and you see all this strong support and you see disagreement between price and momentum, I'm looking to buy low with a test of trades. I'm testing these small trades, small entries, and I want to see what price does at these levels. And if it shows more indecision, we should see a movement there. If our dollar index hits some highs it wants to start selling off, this currency pair will react accordingly. If the dollar drops or the dollar gets weaker, then the Aussie will get stronger. All right, so technically, I like where the levels are at. I know it's falling violently. Trades have been filled. We're just staying small in the trade size, and we're staying patient on the entries for now. CAD Swiss. This one had some news action last week. I'm currently long. I took a little trade around. Let me find the level here. This is a nice inefficiency around 74.20, also known as a pocket in my world. So we have equal lows, watching to see what happens this week. I'm looking for that trade to the upside. Now, if we don't hold these lows and it goes lower, that's fine. Traders in my trading room know what we're doing. We're going to trade this from bigger lows at 73 and 72 and 71. So if this continues to melt to the downside, we get into this blue buy zone, then this is where we're looking to level in from 73, 72, and 71. And again, look at the technicals and the structure. We're just going to buy low, range bound trading to 76. Sell high, range bound trading to 71. Buy low. So the process repeats. We'll stay in the range, but we're going to buy low on CAD Swiss and get some positive rollover and to hopefully have the Swiss franc basket cooperate. CAD Yen. We had our August low from 2019. We have our low high. The 618 was filled. The fifth wave move was filled. This actually is not a surprise. I know a lot of traders that were short on the CAD Yen because of this probability of finding this Fibonacci extension and dropping from there. More than likely, it looks like we have this high to low. Look for a bear flag or look for some continuation lower. I could see the CAD Yen fall into these previous lows or this area around 8,100. So to find ways to participate because the market will likely be moving aggressively, here is Right Trader. So you can see that if we're in the red and we're in the shaded zone, we are in the sell zone. So we have an aggressive sell-off, pull back to resistance, aggressive sell-off, pull back to resistance. What I'd like to see is something like we had right here. I want to see blue candles right here and then turn to red. So if we go blue to red, that's where we look to sell and look for new lows, stop above. So basically you're selling here, stop above, selling here, stop above. If it pulls back again, selling here, stop above. And if this wants to continue, a lot of times when the yens are trending, they trend in flags. Flag, flag, flag. And this will continue. So if there's room for another 120 pips, 130 pips, let me check the numbers right now. I said 8,100 is a pretty good spot for past support. So right around, actually below 8,100. So we have about all of 100 pips. I'd say all of 100 pips, maybe even 150 pips to drop, and this would be happening pretty quickly in bear flag fashion. So right trader could be a nice system to work through to sell on a 30-minute chart, 15-minute chart, and look for some scalping opportunities and bear flag opportunities. The Swiss yen. This one is safe haven versus safe haven. We'll have to see if one can overpower the other. As we showed here on the currency strength chart, you have the Swiss and the yen and the dollar all on top. So this one's not exactly the easiest to trade. Past breakout points, if we end up hitting this level and holding as support, then we can still see some Swiss franc movement to the upside. If this gets more violent to the downside, takes out these lows, then this could be a reversal pattern, and this ends up being a top coming back into range trading. So this is still resistance on Swiss yen down to support, but I need to see the price pattern confirm that first. Otherwise, right now it looks like we could have some continuation with a sustained Swiss strength and a weaker JPY. So we'll see. This one's, we'll talk about the trading room this week. I'm a little hesitant to jump into this one. I do have a trend robot deployed on it so far that's buy only. It took some profit on this move last week, but it's just filled on a couple positions and it's waiting right now. So we'll see if we get any confirmation to continue to buy. The Euro Aussie. This trade was filled to the upside around 62.95. Currently, you can see here we have a nice push to the upside, 6,300. Sell areas back up to equal highs. Again, watch the range. 6,300, 6,350. Previous highs are on 67. I'm looking for sell areas and range-bound trading. If we have this resistance, pushes down to support. If we have this resistance, pushes down to support. I'm still looking for range conditions on Euro Aussie to sell. And, one thing that we're noticing is that we're going higher. This is an aggressive move against the Aussie. The Aussie is extremely weak today. But look at where it is. Resistance here, and the fact that it is running aggressively here, it might run up and exhaust itself, see some indecision, and then we can sell it back down to today's candle. We can sell it back down to the neckline here around 6,000. So from let's say a medium term, I'm still a seller on the Euro Aussie. EuroCAD. EuroCAD was filled at equal lows. We're still riding this trade out around 44.57, looking at a yearly pivot around 48.70. Wow, what a lot of choppiness here on this currency pair. Even the CAD Swiss is a little bit smoother directionally than the Euro CAD. So we'll just leave this one alone for right now, riding this trade out 44.57 and looking to go higher. Target one also around 47 and change, and then our yearly pivot is 48.70. Euro Swiss. Stronger Swiss, pushing it down below 107. You can see this trend continuing. We're currently trading around 106.80. French election gap is filled officially. 10600 is the big round number support. Look left going back into 2000 and this goes back to 2015, 2016, all these lows here in 2017. So that's 106. We might just drift down into those levels. One thing traders can look for, keep it really simple, wait for a trend line break. If we get on the right-hand side of this trend line, I'm looking for bottoming formations on the right side of this trend line. We should be coming back up into these highs around 1.10, 1.1050. Ideally, I'd love to see a move into 1100, but depending on where my entries are, you can see that I have entries 1, 2, 3. I have one earlier than that as well. So I had some small positions in on the right side of the trend line. If I get myself back into profit, which 110, 110.50 is going to be a nice chunk of profit, although I want to hold this a lot longer, I'm just going to be looking to take some partial profits, re-enter, and reposition myself. But right now, my break even on Euro Swiss, let me see where I'm at here. Looks like break even is around 108.40. 108.40. So 108.40 is my break even. If I get to 110, 110.50, then that's a nice chunk of profit to consider protecting. But again, French election gap filled, wait for a trend line break, and this should look a lot better to the upside. Euro pound. Euro pound, we should have had some buy trades filled. Yes, we did. So 8479 filled. 8330 is pending. With the Brexit discussion on Friday this week, the 31st, do we hold these lows? Is there enough to show a weakness on Thursday with the rate decision, or is the rate decision on Thursday going to be really a muted move, and then we go into Friday and see some daily volatility on the pound. But either way, technically, if we don't break these lows, this is my stop area, that's my support level. I'm looking for this to come back into October inefficiencies. So hopefully with this nice trend line break, despite Brexit, look at where we are technically. If we're holding this area, we end up pushing higher, and this level makes us some money. This is trade 1, this is trade 2. Even if we get a range-bound trade here, we can still make some profit as long as price does not invalidate the lows around 83.30. So we'll keep a close eye on this one this week in the trading room and see if we get a nice push to the upside, which would mean if it's a push to the upside, that's a weaker pound. All right, Euro-Yen also falling, finally broke the channel. Look at this resistance. So personally, I didn't sell this one, but was not a surprise to see equal highs and channel resistance. Resistance up here to resistance. Look at the disagreement. Look at the price making slightly higher highs. Look at the noticeable disagreement on the higher time frame. Not a surprise. The hard part is when you're getting trades like this, you start getting confirmations on the smaller time frame. So, the anticipation was there. It's just confirmation on a smaller time frame. If you're looking for sell opportunities, I mean, this is pretty awesome. This 30-minute chart got us into a sell zone here and confirmed around 122. And everything from there, we're down to currently to 120. So you have over 200 pips on a 30-minute chart, all sell zone. So you can see where price momentum disagrees. You can see we're looking to sell high in this case, and where price is confirmed in that sell zone, and you can take some really good trades. So it's a good opportunity, and momentum again likely to pick up. If we start to see lows, indecision, look for this to push lower. If it goes from blue back to red, look for this to push lower, stops above, go after new lows and move those profits pretty aggressively, move those stops aggressively. So more flag trading, more maybe some trend trading on the smaller time frames on the JPY. Euro New Zealand, we're still long on this one with a harmonic trade, and it's going well. We're not quite back to the highs around 69. We're trying to get this one to 7,000 and higher. We bought this one around, let me see where the price level is. We got in around 167.40. So we're looking to take this up. It's just shy of 100 pips in profit. If we get up towards 7,000, we should be up a couple hundred pips. Anything higher than that, we're trapping profit. Euro dollar, currently trading around 1.1050. So interesting decision on the euro dollar. Now, part of me wants to buy the euro dollar at current levels. Here's what I'm going to do. I'm going to cancel my 110 buy trade. I'm going to cancel this buy trade. I will keep my 108.95 and my 108.06. Now, the reason why is if we're seeing safe haven trading right here, this is not going to hold. If we have resistance at the channel and the dollar continuing to get to another level of resistance, then this euro dollar will keep drifting lower into 109, 108. We'll hit this low, we'll find this range low, then we'll bounce up. So rather than getting filled, again, even though they're small trade sizes, if I get filled there and it still proceeds to go lower, by the time I get back into resistance, this one might be break even. This one might be a small loss. This would be a winning trade. That would be a winning trade. But rather than watch the dollar drift higher, watch the euro dollar drift lower, I'm going to cancel that trade at 110. Okay, so I'm not going to trade it at 110. I'll leave my pending buys at 109 and 108, and I'll buy it nice and low. And that gives me a little bit more room to buy it really low and have some great profits, hopefully a much bigger move to come on the euro dollar. But I'm not going to sit here and watch this drift lower. And again, low volatility like 40, 45 pips a day and just keep going lower, choppy, and not really moving much other than going slightly lower. So if there are traders out there scalping from the highs here at 112, it's a great trade. You're moving stop losses, you're letting it run, you're trailing profit. That's fine. Let it go. Right? If you're in profit, eliminate risk and let it fall. See if it gets back to 109. See if it falls to 108. And then we can take profit and we can revisit buying it nice and low. So again, I'm canceling my 110 buy trade. I'm going to buy it lower at 109 and 108. Pound pairs. Pound Aussie's on the move to the upside. We still have not broken this channel with the UK Brexit this week. Are we going to come back up and revisit these highs? Are we going to slightly higher highs? Are we going to disagree? Is that a spot to sell? Possibly. Do we not get above those highs? Do we just end up coming back down to the trend line and coming back down and breaking the trend line and falling into these lows? I don't know. It's a toss-up. Pound volatility could be wild and crazy this week. I'm looking for scalping opportunities. For those of you that have been with me in other sessions and live sessions, consider a London breakout maybe on Friday. That would be something around that 3 a.m. to 4 a.m. window, which is 8 a.m. to 9 a.m. UK time. You can also look at just simple price action during the active zone. So from 2 a.m., the Frankfurt Open, through 12 noon when the US and London session or UK session overlap. But we should see some better volatility than nothing, right? I mean, it's a big deal. We have the UK rate decision Thursday and the official Brexit Friday. But if the pound wakes up and gives us some volatility, it'll be interesting to see where we are at. I'm in the euro pound. That's my current exposure. Pound Swiss and other currency pairs we do have pending buys on. So here's pound Swiss. Pound Swiss, if this one dips a little bit lower, we actually have a pending buy down here. So I am, again, looking for pound weakness. This would get us filled here to buy, or if it comes down again, we would buy. I'm buying pound Swiss, and I'm looking to buy pound dollar. I'm looking to buy the euro pound. But, again, those are pending orders for right now. Pound CAD. This one is, let's just see what happens on the right side of this trend line. Okay, right now, trend line, I mean, I just made a slight adjustment right there just to connect these lows. We just haven't officially broken those lows yet, so I'll see what happens on the right side of the trend line. Otherwise, the highs from November, or this is actually December last year, 2019, with the UK vote. So are we on the right side of the trend line to sell it? Are we coming back up to revisit highs to sell it? Remains to be seen. Short-term trading probably best, but don't lose sight of that bigger time frame structure. Pound Swiss, we did. Pound yen. Pound yens are falling, yen pairs are falling. This one's been pretty choppy. It's probably going to fall back into these lows around 139. I would suspect this one can fall lower. Again, look for those scalping opportunities on yen pairs. Pound New Zealand. Possible head and shoulders here. Left shoulder, head to neckline. And it, again, it changes into something else. If it's not going to respect this channel or respect this lower high to make a neckline, in this case it'd be a right shoulder, left shoulder, head to neckline. We're looking for this right shoulder to top out. If it doesn't top out and it starts to drift back up here, that's okay. That's resistance. I'd still sell this. If we can't invalidate these highs around 2.05, we sell high, we take profit at range levels. Respect the structure. Okay, so this could be scalping to the upside for now, but I don't really like that. I think right now this is correction. Look for right shoulder to top out. Look for resistance at the previous highs to top out, and we try to get a scalping opportunity that turns into a much bigger trade. So I'd still like to sell this as high as possible. Pound dollar. Pound dollar is trading right around 3,000. Again, sideways movement right now. Bit of a wedge. Okay, bit of a wedge going on right here. If we break that trend line, expect this to push a little bit lower. More than likely, this will push into some vicinity like so. A, B, C, D. Something like that around 26 or 25 or 24, which does give us opportunity to scalp. I mean, we could scalp this down towards 26. We can scalp this and protect it around the 5.0 and the 618 swing from this low to high. Again, let confirmation be your guide. If we can't break these lows and we can't confirm, there's not a sell trade. This could just as easily bounce back up and be very range bound as well. So if it stays ugly, I'm not going to trade it. Otherwise, pending orders down here to buy and trying to play the big time frames. Okay, New Zealand CAD. Start wrapping up here in a few minutes. New Zealand CAD back down to lows, pending buys. We're still holding on to this one for a daily harmonic to the upside. I'm fine leveling to this one and staying long. New Zealand Swiss. We had the pullback that we wanted. It is coming back into that monthly pivot at 63.77. What are we doing? We're buying it there at the pivot, which we did, and we're going to buy it down here at equal lows. So that's still a pending buy. With the Swiss franc strength, we'll see what happens. If this continues to go, that's fine. Eventually, this will go to a point where it's going to lows in price, maybe lows in price, disagreement in momentum, and that's our bottom from low to high. And we enjoy a nice little run to the upside, just like we did here. We bought it over here, took some profit. We can buy it over here. We can take some profit. So I'm going to still look for buying low opportunities on the New Zealand Swiss. New Zealand Yen. I'm going to leave this one alone. I know traders were trying to short it at the highs at 73.50 price gap. That's great. It's working out now after a pullback. We still have trend line support around 70. Okay. Other behaviors that I'm looking at for yen pairs. We have an aggressive move today. If there's a bear flag, look for right trader ribbons, resistance. Look for minor pullbacks and pauses. And then look for continuations to push lower. So expect the JPY strength to be vigilant. Expect it to be fast. Expect the volatility to seem like, man, this is really running. I know. It seems like the conditions are very aggressive and very scary when the Japanese yen gets strong. Same thing with the Swiss. But that's okay. If you're going to trade it, scalp it. There's opportunities to scalp it. Stops above, trade the flags, and run with the direction. I mean, if you have currency strength telling you JPY strength, dollar strength, Swiss strength, it's going to be fast and higher volatility. All right, New Zealand dollar also dropping. We're looking at this one from a higher time frame as a neckline opportunity. We're trying to buy this in this zone between 6,400 and 6,450. Neckline support. All right, this could also be, I mean, here's my head and shoulders. There's my left shoulder, head to neckline, and we're falling back into this right shoulder zone. So if we have a right shoulder holding, we get back to the neckline. That's target one. If we break the neckline, then we trade and hold this for a long, long ways to the upside. All right, if we come all the way back down to equal lows, then we look for range opportunities, and we stay in the range. But 6,200 is major support. Let's see what price action gives us. Dollar CAD. I know traders were long with me from the lows at 1.30. This is paying out nicely. Lows at 3,000. We had a nice little bull flag. Low to high, sideways, another push to the upside on the BOC rate decision, and we are well on our way towards 3,300, 3,350. So I'm still looking long to buy the dollar CAD. If you're looking to scalp it, you can consult Right Trader. It's a pretty easy way to scalp it. Six-figure max is bullish. Momentum breakout. The sentiment strength line is bullish. So looking to stay bullish on this. Now, it's actually surprising that the dollar CAD has not made a push higher, considering oil dropped from $65 down to $53. And yet we have not seen this big run on dollar CAD. It's obviously still working, but there's a lag between oil and the CAD. BOC didn't cut rates or anything, but oil has slid. So I think that the dollar CAD remains bullish right now towards 3,300. Dollar Swiss. We have a strong Swiss and a strong dollar. So I'm still long here. This looks like we're forming some lows. And I mentioned this last week in the video. This might be some type of three-drive pattern or falling wedge before we get a push to the upside. So I'm still looking for some bigger alignments on the Swiss franc basket. And looking around, if it stays at current levels, 9,700 fine. 9,550 is a big buy opportunity on the dollar Swiss, in my opinion. Dollar yen. Dollar yen. Dollar yen, we have stronger dollar, stronger yen. Notice here that it did not take out the lows. This one's going to be interesting to see how we finish up the week or even the next couple of days. If the risk-off trading prevails in the next 24 to 48 hours, then we will likely revisit these lows around 108. From there, don't be surprised to see a V bottom and this thing come back up to the highs. I think if you give this enough time, there's probably enough time during an election year to shrug whatever risk-off is really creating the scare in the markets right now to get back to 114 heading into the election in November. So to the downside, it looks like we have about 100 pips or so, depending on how fierce the JPY strength is. Just look, I've got all these horizontal levels. If we V bottom there or come back down into August lows around 105. If I'm a buyer, I'm waiting for the lowest possible price to buy it. Right now, the way I see the movement on other yen pairs, it looks like bear flags and trends and aggressive scalping opportunities will stay with Japanese yen strength. So, again, if we are dropping here, flagging on smaller time frames, look for a push. Flagging again, look for a push. We come back to this low, score some points. You're moving stop losses, you're trapping profits. If it unravels all the way back down, okay, well, this is where the buyers are going to be interested in stepping up and stopping that and V bottoming around 105. So if we're heading lower, then there's certainly room down to 108. There's room down previous levels here around 107 and all the way back down to 104 or 105 actually. So, there's certainly bearish opportunity. You just have to be careful on the yen pairs. They can go violently, and then V bottom and reverse, and they can do all this within a week. I've seen it. Okay, so I'm cautiously bearish. I'm trading smaller. I'm scalping. But if the flavor is risk off, we're going to see it with Japanese yen strength, Swiss franc strength, and most likely dollar strength. So other pairs to trade, like I said, consider Aussie yen, Aussie yen, CAD yen, Euro yen, New Zealand yen. Those are good risk-off trades. If the stock market drops, you see those pairs also moving in favor of Japanese yen strength. I am looking at the bigger time frames on the Aussie. It looks like we're going to have to be more patient with that. The next 24 to 40 hours will be important. We do have a lot of news to consider this week, not to mention the Fed and what they say. Are they cutting rates again? Are they talking about cutting rates? Are they acknowledging that the stock market is dropping or correcting right now? It's a big earnings week. We have Brexit on Friday with the UK. So I'm buckling down on a lot of positions that have been filled. I'm staying patient on the big technical levels. I'm waiting to see over the next 24 to 40 hours, is it still risk off? I'm watching the VIX, or the volatility index, to see if that ends up settling back into, say, 15 or 14, or even back into the lows around 12. I will be looking at those, yearly highs, historical highs on a lot of stocks this week that are big stocks. Tesla, Amazon, AT&T, Visa. We have a ton that were 52-week highs. We might see a correction that was really expected last year, just didn't get it. From August to December, there were virtually no corrections. So it does make sense. We could have a 3, 4, 5% correction that offers a dip. And again, a lot the market can shrug off in that time. But maybe this is a little cleansing week until things start to straighten out. And again, the Fed can step in and start that process. So we might have a nasty 24 to 48 hours of trading, and then the Fed reassures the markets. We buy the dips, earnings come in solid this week, and off we go. And it's like it never happened. So don't hit the panic button quite yet, but we'll be watching. So I'll see you all in my trading room. We have a couple bonus sessions this week on Wednesday for the Fed and Thursday for the UK. And let's have a great week, everybody. It's nice to be back in the home office, and I'll see you all very soon. And again, look for my YouTube video to come out, Module 3, coming this week. This one's going to be about trend lines. Keep those comments coming in. I appreciate the feedback, and I'm taking all those notes. Those are going to be bonus modules in the coming week. So talk to you soon, everybody. Let's have a good week. Bye.